Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. I'll start with ICE raw sugar. The formation of the double top over August to September was, until recently, the most significant feature in recent days. The market had been capped at this, well, let's be honest, broken upper time, currently at 2012. Of the December 2020 to April 2021 bullish shift pitchfork, which had been ultimately ably backed up by the overhead congestion of the January to February 2017 move between 2010 and 21 even. This is what caused the double top. As prices came down the other side of the double top, it became clear that the move lower was muted, giving the impression that the upper time was starting to act not as a cap but as an attractor, probably at the same time. The most obvious expression of this action was how the rising short-medium moving average, currently at 1948, whilst acting in its traditional role as a lagging support, was also interfering with the decline in a more subtle way, thus causing a complex double bottom, whilst also flirting with a bearish cat's ears pattern at the same time. This caused the daily key reversal up 3 Thursdays ago, and the weekly key reversal up 3 weeks ago. 2 weeks ago, we had the hesitating follow-on higher move to these two, with the market peaking last Monday at a new recent high. However, in this peak, there were some seeds that seemed to be set to be the rally's own destruction. For starters, the peak was an indecisive doji cross, not the sort of thing you wish to see at the top of the market if you're a bull. Next, the market ran into the same resistances we had seen before, the January to February 2017 resistances between 2010 and 21 even, plus the upper time again. This led to last week's action, a seeming countering weekly key reversal down, and the option for a possibly larger pattern. It is that the whole of the August today action is a possible large double top. We are currently forming the second part of it, so it is still not sure, but it is a distinct possibility now. However, we are currently contending with the rising short-medium moving average below, and this is before even taking a crack at the supreme-looking support of the combined April to date uptrend currently at 1854 and the rising medium moving average currently 1856. This market has what looks like elements of a market being squeezed, but with still plenty of room to maneuver. Just be careful of that downside for the moment. ICE Europe white sugar. First off, I recall acknowledging that off the top of the daily chart, we still have the whole September 2020 today action as a huge possible bull flag with a potential topside target X2 in the 560 area. This is originally a very big ask of the market, but then as other targets have been achieved, it seemed appropriate to keep this one in mind, just in case, at least for now. Anyway, the recent price rises seem to be laborious as prices tangle with the congestion from early 2017 in the 518 area. Plus, we can still see a pretty good job is being done by the middle time, currently at 512.5 of the early August to early September bullish shift pitchfork. Now, this has some form from September in acting as a supporting time. Note how we only have had one close below it since prices moved over the time back in the middle of September. Thus, it seems to be a solid-looking market attractor, usually acting as a baseline support. Maybe not today so much. Anyway, the market is moving up along this middle time for the moment until it decides it doesn't wish to anymore. Hence, so far, a pretty good indicator of the bullish angle of attack here. Sugar white premium spread. There is no more big bearish May 2020 to February 2021 Andrews pitchfork. This pitchfork had shown the bearish angle of attack of this market, well, since February. 3 weeks ago we had our first close up over the upper time. 2 weeks ago the second consecutive one, and last week the market moved up over the long moving average, currently 77.25. The only reason I've kept it on the weekly chart is for a combination of showing how good it had been in the past and how bad it had become once it was broken. It will be removed next week. The market is now testing two important 50% Fibonacci lines. The big old July 2019 to May 2020 move at 80.25, and the more recent May 2020 to August 2021 move at 82.75. Unlike the long moving average, We've not had a clean close over both of these, closing last week over the 80.25 level, but only piercing the 82.75 level. This market, well, this week has started higher, but we've since come back off, such that we're not too far away from retesting the long moving average, but from the top side now. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.